G'day there, investorholics and friends. Today we'll be continuing our ETF Spotlight review, looking at the ASX 200/300 indexes. Today, pretty much the final in this little series that we've done over the last 2 or 3 days is STW, which is the State Street Spider S&P ASX 200 fund. Hang around, this one's a good little one as well, so if you watch the series of the 4 videos, you'll be able to compare them and hopefully helps you make a decision on which one you would prefer to invest in. Well, hello there, investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, let's get stuck into some detail. Investment objective. So the Spider S&P ASX 200 fund seeks to closely match before fees and expenses returns of the S&P ASX 200 index. So we're tracking the index. So a quick little overview here. This was the first Australian ETF and it's got a 15-year track record, so lots of history to go back and research. So with this ETF, it'll give you diversification, which is the whole idea of ETFs. You gain low cost exposure to over 90% of the Australian equities market with the capitalisation in mind in a single transaction. So you should be able to get some growth out of this one, capture potential stock price growth opportunities offered by the 200 Australian companies across a range of sectors. Income, we always like a bit of income, so earning potential quarterly dividend income with franking credits. It's always nice to have some money in your back pocket for your effort. The S&P ASX 200 is a free float adjusted market cap weighted index, so like all the other indexes I've already looked at, IOZ, A200 and VAS. It is Australia's most used stock market benchmark and covers about 80% of the market. A high level of diversification can sometimes help reduce portfolio risk, so you know, whether you believe in that type of stuff or not, it's up to you, but being able to get 200 stocks in one trade is always good value, I think, anyways. So net asset value of $51.51, trading just below that at $51.48. Market capitalization of $3.484 billion. Management costs, not too bad at 0.13%. Get a nice distribution every quarter, January, April, July, October. Dividend yield is about 5%. So the Australian share market has performed well over the long term, especially when dividends are included, and it should continue to do so. You know, even after the COVID-19 shock, as you see from history, there's always some kind of crisis or some kind of a downturn or whatever. Every sort of 7 to 10 years, you're going to get something major. So this is just another one of those type of things in the scheme of things, and the market will recover. So as we sort of touched on before, STW was launched in 2001 by State Street Global Advisors, who pioneered passive ETF investing in Australia. STW provides expert management and low-cost access to a diversified portfolio of Australian equities in one tradable security, making it a compelling option for investors. So Spider S&P ASX 200 offers compelling value, providing investors with a cheap access to Australian equities by passive tracking the S&P ASX. The STW is one of Australia's largest offerings, with around, as I sort of touched on before, about 3.5 billion in assets as of today. So let's take a look at the holdings. So it's no surprise considering the weighting of the index. CSL, Commonwealth Bank, BHP, Westpac, National Australia Bank, Woolworths, ANZ, Wesfarmers, Telstra, Transurban, all the big players. So you've had total return for the fund over since 2001 of 6.93%. So that includes your dividend and your growth, appreciation in the share price. So, you know, it's definitely worth thinking about combining STW with international exposure just to get a bit more diversification and sort of hopefully even out any bumps. You know, having non-correlated assets is always a good move. Normally I don't talk about this, but this one, you know, because there's pretty good liquidity in this one, you could quite possibly use this one in more short-term trades if you want to trade the index, but not the index were designed to trade. But you know, you could possibly trade it over a short term just because the spread is actually pretty good, because this is a big index, so there's always lots of people trading in and out of this one. So that is a possibility. Not that I'd bother doing it, but it's just another tidbit for you if that type of thing interests you. But there's probably easier ways to make money than trading the index. Yeah, I think it's a pretty good way to get in and start investing. As we touched on, you know, there's ups, and you know, these things always have their ups and downs. But over the distance, you're going to get a pretty good return. It's only the average return of the market, but this is only, you know, you use this as the core, or a product like this as the core of your portfolio, and then you build different individual companies or different index ETFs around it. So this is always a good starting point. So a little ETF like this, I think this one from memory gets a bronze rating from Morningstar, which is always handy. So effectively a bronze rating is 3 out of 5 stars, if I can remember that right. Anyway, definitely worth having a closer look at. There's definite similarities between all 4 of the major S&P ASX 200 fund tracking funds, and also VAS, which tracks the ASX 200. I'll do a little bit of a comparison video in the next few days just to sort of try to pick out the best one, I suppose. Yeah, in the meantime, enjoy the video and happy investing. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.